All right, look, we are in a bear market. We are in a crypto bear market. And look, this bear market can either make you or break you. It can be your biggest opportunity or your biggest nightmare. So what I'm gonna do, I am going to give you 12 bear market rules so you can survive and win. Whether you're a beginner, intermediate, or pro, these rules will help you, and I guarantee you haven't heard all of them. Now look, I've been in crypto since 2017, not just as an investor, not just as a trader, but a C-level executive, an author, a speaker. I have this YouTube channel, and I've seen my fair shares of bear markets. So make sure you pay attention because this video will help you, because this could be your biggest opportunity, and most advice you hear out there is simply crap, okay? So pay attention, get a notepad, get a pen, take some notes because we are starting right now. All right, rule number 1, never buy in a bear market. But Paul, what are you talking about? The bear market's the best time to buy. Everyone says so. No, it isn't. The bear market is the worst time to buy. Let me show you something real quick. See, bear markets are long and gruesome. They can last from a year, 2 years, and so on. And a lot can go wrong in a bear market. For example, the company can just fold. It can just cease to exist. Regulations might mess them up. Maybe they have a regulatory problem. They can get scammed. They can get hacked. Their utility can go obsolete. They can have the best utility in the world, but it can go obsolete. And also narratives, they change. And the longer the bear market lasts, the more dangerous it is to hold a cryptocurrency. Unless, of course, we're talking about Bitcoin and scaling into Bitcoin, but we can talk about this later on. But generally speaking, no, a bear market is not the best time to buy because it can be long and a lot can go wrong during the bear market. Plus, you have opportunity cost. If you put your money into X, but the main narrative turns out to be Y, and no, I'm not talking about chromosomes here, I'm not going woke on this channel, but you get what I mean, then once this narrative starts to fly, your capital is locked over here into X, and you can miss this narrative. It's called opportunity cost. Now you're probably thinking, Paul, okay, so if it's not the best time to buy in the bear market, when is the best time to buy cryptocurrency? It's very simple. As you're coming out of a bear market. Let me show you. See, if you buy as you're coming out of a bear market, in other words, when resistance starts breaking over here, you can actually see which coins have survived, which coins are still building, and most importantly, what the new narratives are. You don't want to be stuck in X when Y flies. Does that make sense? So the best time is not to buy in a bear market. The best time is to buy as you're coming out of a bear market. And you don't need to grab the exact bottom. Most of the gains happen in the middle. Okay, you have the bottom, you have the top. The biggest gains are in the middle, not at the bottom, not at the top. Does that make sense? Rule number 2. It's not the price drop that gets you wrecked. Let me explain. See, when you have a certain cryptocurrency, it's not the price drop that gets you wrecked. This can fall 50, 60, 70%. It doesn't really matter. Well, it matters, but it doesn't really matter. It's not the drop. The problem is the sustained time under resistance. In other words, once the price drops, for example, Bitcoin has dropped what, 50% as I'm making this video. But it's not the drop that gets you, it's the sustained time it stays at the lower levels. This can drain you, and a lot of projects can't handle it. They can't handle it and they fold, they go bankrupt. Things go wrong, especially with your emotion. And this can last a year, even more. That is what kills you. That is what gets you wrecked. It can make you give up. It can make you make wrong moves. You might need money. You may need to pull money out of crypto. That is the problem. It's not the price drop. A lot of people tell you, Paul, it doesn't matter if it goes down 50%. I'll just hodl. Sometimes you can't. Sometimes you don't want to. And the drainage that you get emotionally is what gets you wrecked. So it's all about dopamine. If you've been in crypto, you get this dopamine, you get this rush. It's like drugs, it's like the casino, like gambling. It is intense. And once the price drops, as a matter of fact, some people even they get this dopamine feeling even when the price drops. But when it stays down here and it stays in a range, over a period of time, you start missing this dopamine. It's like being a drug addict and you're missing the dopamine, and it gets you, it drives you nuts. It gets you depressed. A lot of people give up on crypto as a whole because they can't take it anymore, because they don't get that high. A lot of people don't think about this, but it's really, really bad. And a lot of people get even suicidal. There's a lot of issues that happen from this. So be very careful, because this is real. This feeling is real. So don't be worried so much about the price drop. People might say just buy the dip. No, it's the sustained time at lower levels and you missing that dopamine rush. That's the issue, okay? So rule number three, never go all in on one dip. You either scale in or you scale out. Let me explain with a current example. Bitcoin reached roughly $126,000. We were saying it's gonna go to $120,000 to $140,000 by the end of the cycle. It did. Now this dropped differently than other cycles. We actually exited at 117,000. We exited again at 112,000, and we also exited again when $100,000 became resistance, okay? So we scaled out. We took profits, but we scaled out because we were expecting one more run. Now, in hindsight, everyone can say, oh, that was the top. But at that time, you don't know. We could have had that one more run to 140,000. Altcoin season never happened. We were expecting at least some selective altcoin season. So we didn't get out. We slowly got out, okay? The trick is to slowly get in. For example, we said we're gonna drop down to the $74,000 range, and $74,000, if that breaks, structure breaks, and we go into a bear market. So we bought around 70K. When $70,000 became resistance, we anticipated a move to the 60K level or even lower. When 60K bounced, we started buying at $62,000. Now I entered with 1/3 of my cash position I took from over here, and now it's very simple. We went up, we did great, I could take profits, but if we go down and break 60K, we're expecting the 40 to 50K level, and we can enter with another 2/3 or 1/3 of our position over here. Does that make sense? You get in, you don't dollar cost average, you don't DCA, you DSA, you dollar swing average. I know you never heard of that before, it's a term I coined, but it's how I trade on the factor line, but we're not gonna talk about this in this video. But you want to scale in and scale out, okay? You don't want to buy the dip into oblivion. You don't want to buy the dip into boredom. Okay? You want to take positions and look at it as a whole, as a portfolio, as how can I put this? In a macro sense, because chances are you won't be able to time this market, which brings me to the next point. Do not keep buying the dip into boredom, okay? This is the worst thing you can do. You don't want to do this. See, you want to think about crypto as a business. Whether you're trading or whether you're investing, you want to think about crypto as a business. So imagine you had a shop. Imagine you had a shop with dresses, okay? And you had red dresses, you had blue dresses, and you had green dresses. And one day, your distributor comes and says, look, we have a special on green dresses, or we have a 20% or 30% discount. You're like, great, okay, I'll buy the green dresses. So you buy the green dresses. But then, a month after, they're not selling that well, but a month after, he comes again, look, I have another 50% discount on the green dresses. It's a great opportunity. So you buy more green dresses. And then he comes again, there's another 20% discount on dresses. What are you gonna do? Keep buying the green dresses while everybody wants the red dresses, or the red dresses comes into narrative? Remember our rule from earlier on? The red dresses come into narrative. Now there's opportunity cost, but you have the whole shop full of green dresses. Don't keep buying the dip. People just keep buying the dip. That's the stupidest thing I've ever heard. What, would you keep buying green dresses? Seriously. No, of course not. Maybe you buy it once, maybe you buy it twice, but when people want the red dresses or the blue dresses, you're not gonna keep on buying the green dresses. You have nothing to sell. The narrative is elsewhere. Now you can argue maybe the green dresses come in fashion in a few years. Really? That's what you want to do? Hold on to hope? No, that's not what you do. You play by narrative. So don't keep buying the dip. That is the stupidest thing, some of the stupidest advice I've ever heard on the internet. Next rule. The bigger the range, the bigger the breakout. Listen, on the Crypto Factor, we trade ranges. I trade ranges a lot. And the longer the range is intact, the bigger the breakout will be. And ranges are also in bear markets. Remember I said it's not how low it can go, it's how long it can go sideways. That is a range. So when you have a range over here, let's say you have a range, your Bitcoin will drop or your crypto drops in this range and it sticks in this range for a while. You have a couple of fake outs over here. Once the range breaks to the upside and makes the support, that's a key, and breaks the previous level, that can be explosive. That is when you get in. You scale in over here and over here, and you have a clear stop loss or exit plan over here. Does that make sense? Of course, this can also happen to the downside, but the good news is either it goes down, either goes up. Once it breaks a range that's been a long time, this can be explosive. So either you're gonna go to much higher levels and make profits, or much lower levels where you get better opportunities. Does that make sense? So make sure you play ranges. When it comes to bear markets especially, play ranges. Don't worry, we'll talk about that a little bit later in the video. I just want to give you more rules that are extremely important right now. Moving on to rule number, I don't know what number it is. Let's just move on to the next rule. If a coin needs hype to survive, it probably won't. Listen, a lot of people play hype coins in bear markets. This does not work. In bull markets, you have some leeway. You might be able to get something right, but as you saw, we said that the last cycle was a Bitcoin narrative cycle. We're only gonna have mini alt seasons and select altcoin seasons. We didn't even get a select altcoin season. We just got mini alt season. So this is very dangerous. You don't want to be doing this. You don't want to be playing on hype. If you are going off of hype, if you're expecting a coin to rise because of hype, you probably already lost. That's not what you do in a bear market. That's not a bear market strategy. That is just dumb play. What you want to do in a bear market is survive and set yourself up and maybe get a portfolio or plan your portfolio on breakouts and try to predict narratives. But the basic two rules is to survive and set yourself up. Does that make sense? Get this into your head. Stop posting memes on my channel. Stop posting shitcoins on my channel. I do not care. We're in a bear market. They're hype driven. They're going nowhere. And even if they do, there's no liquidity. Someone will sell before you will crash down to zero or nothing at all. Rule number 7, following off our last rule, Bitcoin first, quality second, garbage never. Look, I said earlier on, you don't want to be buying in the bear market. You want to be buying as you're coming out of a bear market. But if you want to DCA, go Bitcoin only, because you can't really go wrong. It's got the sound hard money narrative. It's a hedge and so on. I get that. That's fine. Okay? Even if it goes lower, you're buying Bitcoin, chances are it'll go back up again. If you want to buy altcoins, and you don't want to time this, you just want to buy through the bear market in DCA, go for larger cap coins. You got Bitcoin, then you got larger cap coins, Ethereum, Solana, and so on. That kinda makes sense. I would wait, but that kinda makes sense. Why I would wait? Because I like having more cash so I can get into narratives and grabbing those explosive moves, but I get it. But never buy shitcoins, okay? Never buy crap coins. As I said, last rule, if it needs hype to survive, it probably won't survive. If you're buying hype, you're probably going to zero. Just buy Bitcoin, maybe Solana, maybe Ethereum, and so on. Hype might be a narrative for the next bull market. We'll talk about that in another video, but you get what I mean, okay? Be very careful, be stingy with what you buy. And talking about narratives, I'm gonna give you the narratives that I see for the next cycle as of now, so you can keep your eye on, so I can give you some more value in this video. So the first one I see is perpetual dexes, okay? I mentioned hype earlier, Aster coin is another one. And if Sui kicks in the next cycle, then something like Bluefin may also come into play. So you have hype, you have Aster, you have Bluefin, and we'll see if we have any perpetual dexes as we're coming out of the bear market. Another one, of course, is AI. AI will make a comeback, and AI narrative coins are probably gonna do well. And the biggest narrative I see that ties into this is X402. This is payments. This has to do with AI, but this is another narrative that I am seeing that's coming into play. I have a video on this. I'll leave it in the description down below so you can be ready for the next cycle. Rule number 8, in a bear market, cash is a position. Listen, in a bear market, cash is a position. I know you hear a lot of people out there, a lot of gurus in finance, in crypto, telling you, don't hold cash, inflation, this, that. No, cash is a position because cash allows you to live, move, gives you options. You can buy narratives. Cash is a position. It's okay to hold cash. And I just want to throw this out there. Don't feel bad. Even if you're just full in all in stocks, crypto, whatever, you're holding Bitcoin, it's okay to hold some cash over here. You can use this cash. If you miss the move, you can go for lagging plays. Does that make sense? If Bitcoin goes up, altcoins goes up, there will always be lagging plays, new projects, and new opportunities. Hold cash in a bear market. It also protects you. Does that make sense? Cash is a position in a bear market. Rule number 9, never trade off of news. Listen. There is news for the masses and there is news for the classes. We only get the news for the masses, meaning we are not in the know. We are not the insiders. We don't get the news that they get. We either get delayed news, in other words, the move already happened and we're trying to justify the move, or we are getting the news they want us to get. Does that make sense? Even if it was news, it's already priced in anyway. It's already priced in anyway. By the time you trade off of news or take a position off of news, you are late. So there's news for the masses and news for the classes. Never, ever trade off of news. Use TA, learn TA, show me the charts, and I'll tell you the news. Because TA can actually, it's your only chance, whether you believe it works, whether you don't believe it works, it's your only chance to actually get into a position early. It's your only chance to see anomalies in the chart, breakouts, sentiment change, and so on. It's TA. So learn TA. Learn TA, and it'll be a lot easier for you to trade these markets. Oh my God, there is a war, the price is going down. It went up. Oh my God, they're cutting rates, that means it goes up. Just stop. Stop trading off of news. It's crap, it's stupid, it's moronic. It does not work. Number 10, if you are trading in a bear market, take profits faster. Listen, if you are trading in a bear market, make sure you take profits faster. Those resistance levels that you get, that's where you're supposed to be taking profits. You can always buy back in once those resistances break, meaning buying higher. Yes, I said that. Sometimes it makes sense to buy higher. Let me show you what I mean. Let's say this is a line chart. I work off candles usually, but let's just say this is a line chart. And you have resistance areas here, support area, let's say here. Now this is not perfect, but you get what I mean, okay? Let's say you buy at a support area and it's a higher low. So you had your low over here, it came higher, it bounced, and you bought. Breaks this resistance and comes over here. Take profits at the top of the range over here. You're seeing that this faked out twice. You're seeing that this is resistance here and almost here. Take profits. If it comes back down, great, you can buy again. If it comes up and this time it makes this support and keeps on going up, you can buy higher over here and then take profits again faster. You want to take profits fast. You want to take profits fast and protect yourself. You don't want to make long moves. Because if you're swing trading, because a lot of people are going to say, oh, Paul, but I'm a swing trader. If you're a swing trader, you're not getting in here. You're not getting in here. You're making longer moves and you're waiting for the price to go lower or higher anyway outside that range. So don't get fooled. This is why people don't understand technical analysis or don't understand the difference between swing trading and day trading and confuse everything. Just stop doing that. Take profits faster and protect yourself. Extremely important in bear markets because prices can go a lot lower. And remember I told you if the range breaks, it can go explosively lower where you don't even expect. Price can always go lower. Remember that. Now, I touched on this rule before, but I think it's an important one. The goal is not constant action. You don't want to be constantly taking action because you have that dopamine. You feel you want to always do something and you keep on getting in and out. The price goes up, you buy, it goes back down, you sell, it goes back up and you buy, and then you're like, okay, I'm just going to buy and then hold, and then a week goes by. This is your dopamine. It's your dopamine driving you crazy. Remember I told you earlier on in this video that you're addicted to that dopamine. That makes you overtrade. Don't keep looking for action. Your mission, your goal, your strategy, so to speak, is to survive and position yourself. That's all. Survive and position yourself. That's what bear markets are all about. Use bear markets to level up. Listen, whether you're in crypto, whether you're in business, whether this is a crypto bear market, a normal bear market, a wide range bear market, whatever, it doesn't matter. Use bear markets to level up. And I'm not just talking about buying crypto, buying stocks. That's not what I'm talking about at all. What I'm talking about is leveling up yourself. If you are a business in crisis, in bear markets, everybody contracts. Everybody contracts, including your competitors. That's the time where you go all in and you expand. By expanding, you get above the noise and you can take market share. It's the same thing when it comes into crypto. And no, I don't mean buying. And although that does have a place here, as I explained earlier on. But what you want to be doing is leveling up you, learning technical analysis, learning about crypto, reading books, taking courses, leveling you up. Does that make sense? Every bear market, I concentrate on me. I level up skills. I learn. This gives me opportunity. Why does it give me opportunity? Because I get lucky. Why do I get lucky? Because luck is preparation meets opportunity. Meaning if you prepare and you get the skills, you get the know-how and you learn, opportunity will knock on your door and you will get lucky. And when people say, oh, he got that AI coin, he got X402 coin, he got lucky because he kept hype and whatever. It's not. It's preparation. Plus, you get smarter. And yes, I'm coughing because I'm not breathing because I'm trying to get this out because it's so important. So for me, If I was you, read the Bitcoin Standard by Saifedean Ammous. Learn how perpetual DEXs work. Get some perpetual DEX accounts and start playing around with them so you can learn. Get a course and learn crypto. If you want to get a course and learn crypto, get the Factor Line. Get the Invest, Trade, and Think Like the Crypto Factor course that comes with the Factor Line. Let me show you something real quick. The Invest, Trade, and Think Like the Crypto Factor course. This is a complete crypto system course and indicator and AI crypto coach. Yes, it's $1,497. It's on the expensive side, but once you see what you actually get, this will make sense. And this price will go up when we come out of the bear market. First of all, you get the Factor Line indicator, okay? You get the Factor Line indicator, which shows you exactly how I trade. It's the indicator that I personally use. This is it right here. It tells you when to buy, when to sell, and gives you the ranges. It's a very advanced indicator, very simple to use. Right now it's telling you to buy, or it told you to buy back here. And as you can see, we're coming up and we might break out of this range. If this becomes support, that's your second time to scale in. You're looking at resistance here and here, but we'll talk about that in another video. But it's basically the indicator that I use when I do technical analysis on my channel. It gives you a built-in AI crypto coach, so you can ask questions about the indicator or anything you want. It's got answer mode and training mode. It's actually very advanced on the Factor Line logic. It gives you a framework, and basically, I'm just gonna let you check this out. I'm gonna let you check this out in the descriptions down before, but it teaches you how to invest like I do, how to trade like I do, and how to think like I do. Plus it gives you the Factor Line. So check it out. It's in the links in the description down below. And if you want to check out how to build the perfect crypto portfolio in a bear market, or as you're coming out of a bear market, make sure you watch this video up here. And if it's not up there yet, don't worry, it will be soon. Check out this video down here about X402 tokens, because I do believe that this is gonna be one of the next narrative. So check out these videos and I will see you in the next video.